Okay, the markets are as flat as can be as we speak. Here in Mumbai, it's a dry day actually, but a couple of stocks are doing well. United Spirits and United Breweries, both of them have moved to the high point of the day. So pull up both those two stocks. You'll see both of them have spiked up in the last 1 hour or so. But let's talk about a couple of stocks then. And I think we can concentrate on the cement pack. BofA ML, they have come out with the note today. And they have upgraded both ACC as well as Ambuja Cements. Now, on Ambuja Cements, they had a neutral, that's gone to buy. And on ACC, they had an underweight, that's gone to neutral. Now, out there, in fact, they cite valuations as one of the key reasons. Remember, both those two stocks, they are trading at sub 10 times EV upon EBITDA. So in terms of ACC, they're saying it trades at a discount of more than 10% in comparison to its historical averages. While in terms of Ambuja Cements, they're saying it's trading more or less at, on par with what it was trading in the past. The other reason that they are citing is that cement prices have moved up. That's what's going to help their profitability going ahead. So profitability could jump up by nearly around 15 to around 16% in the coming year on the back of these cement price increases. And finally, they're saying that ACC and Ambuja Cements have always been constrained for lack of capacity. Now, the next couple of years, that as well could ease out. So these are the reasons why they're positive on both these two stocks. And the stocks reacting favorably, up 1.5 to around 2% odd. But on the other couple of counters, that's in Shree Cement and Ultratech Cement, remember, it trades at premium valuations. So they have an underperform on both those two stocks. They have mentioned in their note that in Q1, FY20, we did see prices move up, but in Q2 onwards, they're expecting prices to come under pressure and they're expecting prices to see a sharp correction out there. In terms of demand, they're factoring in a 4% cement demand growth in FY20, and for the next few years, that's from FY19 to FY22, they're seeing a growth of only around 5.5% odd. So short point, they're positive on ACC and Ambuja Cements on the back of valuations. On the rest of the sector, they're seeming a little bit cautious as well as per that note. We also have a note actually coming in from HSBC, and that note's quite interesting because they are remaining cautious on the sector on the whole. Out there, they say the risk reward, that ratio is not favorable at current standing. And they are also mentioning that consensus estimates are very, very high. In terms of EBITDA, the growth that the street is working with is nearly around 18% over the next few years. HSBC is working with a number of around 13%. And they're also saying valuation-wise, it's nearly 75% higher than global peers and even higher than its historic average by nearly around 30% odd. Put this all together, HSBC is saying that they're cautious on Ultratech Cement as well as Shree Cement. Though they've upped the target price on both those two, they continue to maintain the reduced rating. While on Ambuja Cements and ACC, they have a hold rating out there, but they've cut their target price on both those two stocks. So that's about the cement pack. But Rima, tell us about NIT Tech. Surprise move coming in there. The PE going ahead and increasing, the open offer from around 26% to 35%.
Absolutely. So Bearings PE is now the new promoter of NIT Technology after they acquired the 30% stake from the promoters, the Thadani Group, and then consequently bought about 5% stake in the open offer. The open offer was expected to begin on the 15th. That's a Monday. So just 2 days prior to that, what Bearings has done is now they've announced that the open offer size has been increased to 35% versus 26%. So the question is, what prompted this sudden change just 2 days prior? I understand that, the SEBI approval also came only a couple of days ago. So only after that could you make any changes. So that could be one of the factors. One of the factors could be that the promoters are actually very bullish on NIT Technology, which is why they want to go ahead and increase their stake. But remember, they already hold a 35% stake. With an additional 35% stake, their promoter holding will stand at 70%. What happens in the event the government proposal to bring the promoter shareholding down to 65% comes through? Of course, it'll happen only in 3 years, 5 years. But anyway, then they'll have to bring it down. So that's another surprising element to it. Current thinking is that considering the open offer price is at 13.94, this is very close to its lifetime high. The stock has been an outperformer. The acceptance ratio will be on the higher side. Most people are likely to tender in the open offer. Now, with the open offer size getting increased, the acceptance ratio goes up even more, which is why you've seen that short squeeze take place in the futures. Both the NIT Tech July futures as well as in the August futures, you can see the stocks higher by about 2.5%, a little more than what the spot is. Because what do people do? They buy in the spot market, they sell in the futures market, because whatever shares are not accepted in your cash market, to hedge that, they have sold in the futures market. And now because the open offer size has gone up, the acceptance ratio is expected to go up, which is why there seems seems to be that short squeeze taking place in the futures. See, you can see the August futures is actually now almost higher by close to about 3%. Just an interesting development. It's acceptable.
Yeah.
It's not that they've broken any rules. It's just that now the open offer size has increased substantially to 35% versus 26% for NIT Tech. And those shareholders who want to tender it, the open offer begins on the 15th of this month.
Okay, Rima, that'll be quite interesting actually, because the players who went ahead and short Mindtree, they make big money. So on the back of that, a lot of people are going ahead and shorting NIT Tech, but they could get trapped on the back of this, because what normally happens is, if, for example, you buy 100 shares in the cash market, in the futures, you short the quantity that you expect is not going to get accepted. Suddenly the quantity that will be accepted in the open offer will be higher. Then you have shorted an additional lot. So you'll have to, cut down on that size as well. Well, let's move on then. Bankers to SRC, led by SBI, are likely to appeal the NCLAT order in Supreme Court today or tomorrow. Lata's with us to run us through those details. Lata.
Oh, well, I just wanted to highlight the importance of the NCLAT order and why the Committee of Creditors just have to go and appeal. What we hear from our sources is that it could be appealed as early as today or at best tomorrow. Now, what was so intriguing about the judgment? The NCLAT judgment, actually, the most important part was it said that Arcelor is an accepted buyer. But the devil was in the fine print, which said that the Committee of Creditors and the way they distributed the money is not acceptable. What it said is that the Committee of Creditors had given 90% to the financial creditors and 10% to the operational creditors. The NCLAT just turned all that and said 40% should go to the operational creditors. One of the unsecured creditors who was getting some peanuts, Stan Chart, was given a higher amount. Now, there are two principles here. One, under the IBC, it is more or less decided that the operational creditors shall get 10%. Now, of course, the NCLAT argued, it says it's a minimum of 10%. So it's not just 10%. But the way everybody understood the IBC law is that operational creditors get 10%. And the COC shall decide what is the best commercial arrangement, because only they know how the company can be run. Now, if the judges start changing how the whole thing should be ordered, then you cannot, how will you choose a resolution plan? The resolution applicant comes with a certain plan, expecting that the bankers will back him. Now, if you disturb all that, the bankers will not back him, the resolution applicant will not like the resolution. So, two principles are at stake. One, whether the COC's plan can be set aside by the NCLAT lock, stock and barrel, unless it is like, seriously violating some law. And secondly, whether this is the biggest point, whether secured and unsecured creditors can be given the same rights, and operational and financial creditors. I mean, when a bank gives a loan, it plans it usually very well. You ask for collateral, you secure the underlying. Whereas there are a lot of other entities which, have given loans over maybe equity with some collateral or no collateral at all, unsecured loan. By bringing them together, what effectively will happen is, if that is the law of the land, banks will give everything as unsecured, and to make sure that you pay the money, they'll simply charge you 20% interest, so that in 5 months I recover the principal. You're actually disturbing well-established commercial law that secured creditors have senior debt and the unsecured ones are junior in debt. So, therefore, this appeal is absolutely important. It has overturned, and a lot of foreign funds who wanted to invest in distressed assets are backing off. Bankers themselves don't know how to draw future covenants if somebody comes and asks for a loan, the way things are. So, an important appeal either today or tomorrow.
Thank you, Lata, for that.